adjustments. This slideshow is just to explain the adjustments of activity 7.7. The first adjustment tells us that the partner donated goods on behalf of the business, but it was recorded as drawings for him. So obviously it must be subtracted from drawings and added to donations. The problem is that you have to be able to calculate the cost price. There I've shown you the calculation. Second part of adjustment 1, trading stock was returned to a creditor and it was recorded in the CAJ as 1282 but posted as 1828. What does this mean? This means that the amount we've posted was too much. Remember, in the CRJ we return goods. So if the returns were too much, we have to add back. That is why there is a plus 546 next to trading stock and a plus 546 next to creditors control, because when we return we minus too much from trading stock and minus too much from creditors control. Last part of adjustment 1 is the invoice recorded as land and buildings, but it specified that the full invoice was recorded, so that means the full 32,000 was added to land and buildings. That was a mistake because part of that was repairs to the existing buildings. That's why I have a plus 8,000, and part of that was repairs to one of the partners' private residence. That's why I have a plus 2,000. So if you take that away, then you should minus that 10,000 from buildings and add to those two accounts. Don't forget when you get to note 3 that land and buildings increased during this year. Adjustment 2, stock on hand according to the physical stock take. So you need to calculate trading inventory deficit. Important to remember that there was already an adjustment concerning trading stock. So take that adjustment into consideration when you calculate the trading stock deficit. And then consumable stores on hand. Stationery will be decreased with that, and then you have a new account called consumable stores on hand. Adjustment number 3 is writing off a bad debt. Straightforward. Adjustment number 4, you have to adjust the provision for bad debts to 4% of trade debtors. Remember, debtors control already had an adjustment. Can you see that there? It's the 31,500 minus the 9,000 from the previous adjustment. There's the calculation, and your provision for bad debt now should be 1224, which means that this one is going to be actually needs to be adjusted to 1224, which means we have to decrease the existing provision for bad debts. And if you decrease the existing provision for bad debts, you will have to credit provision for bad debts adjustment. Adjustment 5 is the one that you can be for sure that this is going to be asked in this year and in all the exams next year. Details of the employee left out. I've tried to organize that into the amount and what is the effect on the trial balance. The gross wage must be added to wages. The PAY deduction must go to SARS PAY. The UIF deduction must go to the UIF. The UIF contribution must go to the UIF contributions, the plus 10 rand, and don't forget that that same plus 10 rand must go to UIF because the contribution we also owe to UIF. Then that's how your net wage was paid in February but nothing else. That is why there is a balance, a debit balance for creditors for wages. So now you're going to minus that, which is the credit, and you will not have creditors for wages in the note 9 for the note for trade and other creditors, trade and other payables, SARS, PAYE, UIF, and then UIF contribution. Adjustment number 6 has to do with the rent. The rent increased during the past year. So we need to make sure this is our financial year and this is the rent year. The rent per month for the first year, you have to calculate the rent per month for the second year. Then we need to calculate how much money we were supposed to receive for rent in our financial year. From the 1st of July to the 1st of March, it was 1,400. From the 1st of March to the 30th of June, it was 1,610. So we have 8 months at 1,400 and 4 months at 1,610. So our rent for the year should be 1,7,640. Rent income was 19,250, which means it's too much. It should be 1,764. Income received in advance. There's the calculation. Annual insurance policy was paid on the 1st of April. Insurance is always prepaid, remember, normally. And then the financial year ended when the insurance policy ends. So prepaid from the 1st of July to the 31st of March, which is 9 months. That is why I have divide by 12 times 9 to get the prepaid part. Prepaid must be subtracted from insurance, and then you have an account called prepaid expense. Adjustment number 8 is the telephone for June must still be paid. Accrued expense must be added, and then you have accrued expenses. Adjustment number 9 is depreciation. Don't forget that in this one, they tell you there was new equipment bought and it was correctly recorded. So therefore, your calculation must be in 2 parts. On the old equipment, to get the depreciation on the old equipment. And then the new equipment, which we had for 9 of the 12 months, get your total depreciation. Don't forget that when you get to note 3, that the equipment must be divided into old and new so that you can get the correct cost price. Now, these are all the adjustments. Your homework for Monday will be to do the statement of comprehensive income together with the notes 1 and 2. Do not do the other notes. Let me first mark the statement of comprehensive income. Then I'm going to let you do the other notes because we haven't done anything about the sharing of the profit yet, and we cannot do that until we've done the statement of comprehensive income. I think we all deserve a break, so no homework for tomorrow. This is all homework for Monday. Keep well, stay safe, and be good.